So before I go into the corporate presentation straight, I would just give a gist about us. We are Indel Money. We are a non-banking finance company governed by the Reserve Bank of India under the RBI license. So we're basically a gold loan company. So when we say a gold loan company, we do the same things as the other gold loan companies do. We are no different. But the only uniqueness what we have is that we do the same things in a very different manner. So we have our uniqueness in terms of the product design, where our product has been designed revolving around the customer. It's a customer-friendly product design where basically it starts from 1 year, tenure itself, not like the other competitors, 3 months, 6 months, and 9 months. And the other uniqueness what we have is the culture what we follow, and in the form of understanding the customer, human connect, and many other attributable features, which is a part of our culture. And the third uniqueness is our branch placements. We don't believe in carpet bombs, but we do strategic positioning of branches so that we might be low in number of branches, but wherever we go into the market, we lead at the top 3 itself. So that's how we've been keeping our uniqueness. And the second agenda today is to introduce you to our public issue of non-convertible debentures. And I know that the market is quite profound and quite well versed with road shows and press meets running in the basis of equity public issues, but very seldom on the debenture public issues. I personally feel that equity is quite volatile and there's a lot of highs and lows. The chances of getting high returns are high, similarly the vice versa. But I always believe that a certain portion of your investment should be hedged with certain secured NCDs, secured coupon returns, where I feel the gold loan companies' coupons are one of the best, which I would explain to you in more detail along with the presentation. So I wouldn't like to take much of your time. I would like to run straight into the corporate presentation of ours. So to speak about the rise of Indel, it was being started by my granddad, whose name is Janardhan Nair, who was the first pilot of Bharat Airways, later on to form Indian Airlines. He flew the first aircraft of the first Prime Minister of India. Then later on he joined Tata Tea as their Assam Valley head. And then later he moved to the Middle East as the commercial director of a large oil and gas conglomerate. In the early 80s, he was being called back by his family and to take care of their business affairs, which included plantations and agriculture, etc. It is on his return he understood and he recognized a last mile financial disconnect for the labor class of people. So that is how he came into the finance business, into a small village town of ours called Palakkad inside Kerala, which is bordering down to the city of Coimbatore. And he started this as a wage discounting finance system for our own domestic class of labor. So 2011, after him passing away, me and my father, who is currently the chairman managing director of the organization, we decided to pursue the finance business on more of a serious note. Speaking about our chairman, he is himself an experienced banker. He's a 37 years experienced banker as the trade finance head of international banks in Middle East. And I am an investment banker myself, working in international market, had my stint at international markets for near to 2 decades. So 2013, we started our business and we took the RBI license along with the gold loan. So again, it was what made us decide to go into the gold loan, because that period was very bad for the gold loan companies as gold prices had fallen. So we had a chance to learn from the mistakes from our predecessors and we understood the opportunity which was in the market. So it is that learning which forced us into the gold loan business at that point of time. In 2015, we got our first CRISIL rating. So we have been still rated by CRISIL. We entered into the state of Tamil Nadu. In 2016, we were upgraded by CRISIL to BBB minus. 2018, we entered into the state of Karnataka. 2019, we entered into the state of Telangana and Andhra Pradesh. 2020, Indel Money launches his doorstep gold loan, which was a piloted project in Bangalore and later in Hyderabad. 2021, we did our first public issue of NCD, which was subscribed by 125%. Our rating was being upgraded to BBB by CRISIL, and we had entered to the state of Odisha. 2022, we launched our digital personal loan along with our hybrid gold loan platform, which is quite unique for us in this nation. And we launched our second NCD where we had a subscription of 162%, and CRISIL had upgraded us to BBB+, and we entered into the states of Maharashtra. 2023, we did our third public issue with a subscription of 176%, and we entered into the states of Madhya Pradesh, Delhi, NCR, and Uttar Pradesh through Noida. Moreover, we were also awarded an AD2 license by the Reserve Bank of India. By the way, I would like to pull your attention that we are the second NBFC to get a straight AD2 license from the Reserve Bank of India. Now to take you through our key strengths, we have 1,300 plus of staff strength. We have a high capital adequacy ratio. We are rated none other than by CRISIL. And we are digitally driven banking. We are a digitally driven banking system organization. We are low on leverage. We have got our doorstep lending platform, which also houses our hybrid gold loan system. To speak about the management team, we've got Jijit Raj Tekel, who's along with the dais today. He's our business head. He's got 18 years plus of BFSI experience. He has worked in institutions like HSBC, Yes Bank, and Reliance Capital. Also, he was the national head for h5tv, which is the subsidiary of Federal Bank. We've got KNC Nair, who is our Chief Information Officer. He was the ex-IT head for Federal Bank, and he was the ex-IT head for Muthoot Finance. He's a person from a rich experience background and had built the softwares for the erstwhile both the companies. We got Narayan Pisharat, who is our head of finance and accounts. He's got more than 25 years of experience in various sectors, automotive, manufacturing, distribution, and the BFSI sector. We've got Sri Kumar A, who is our head and credit and risk. He's an ex-DGM of State Bank of India. We've got Sudesh PR, our head of strategy and operations. He's a person with 19 years plus of experience in the BFSI sector, where he has worked in Tata AIG and Muthoot FinCorp. We've got Prasad Chemban, who is our head of third-party business. He's got a 20-year plus of experience in the BFSI sector. He was the ex-third-party head of Muthoot FinCorp. We've got Chandrasekharan Nair Saji, who is our chief compliance officer. He's an ex-DGM of State Bank of India. We've got Venugopalan MV, who is the head of internal audit. He was the head of internal audit for the Federal Bank as well as their subsidiary NBFC called h5tv. We've got Hanna P. Nazar, who is our company secretary, who's got an experience of more than 8 years in the BFSI sector. Her last stint was with Muthoot Capital. And we've got Matthew K. Mani, who is our head of HR and admin, who's got more than 20 years of experience, and his last stint was as the HR head of Manappuram. We've got Chanchal Gangadharan, who is our head of marketing and corporate communication, who did the welcome speech today. He's got 25 years of plus of experience, and he's been working with large companies like Star Network, Aster Healthcare, etc. Now, introducing the board of directors, we've got Mohanan Gopalakrishnan, the chairman and managing director, who is an experienced banker himself of 37 years. He has been serving international banks in the Middle East as their trade finance head. We've got NS Venkatesh, who is our independent director, who is also the chairman of our audit committee. He's a chartered accountant by qualification, and he is the current AMFI CEO, which is Association of Mutual Fund of India. He's ex-ED of IDBI Bank too. We've got TR Anantharaman, who is the director and chairman of our finance and ALCO committee. He's a chartered accountant by profession, and he's a practicing chartered accountant, where he's a partner of Sengotian and Company. We've got Salil Venu, who is our director of administration. He's got 20 years of plus of corporate experience. We've got CR Shashikumar, who is our independent director, also a member of the audit committee. He's the ex-managing director of State Bank of India. We've got S. Ganesh, our another independent director, who is a former principal general manager of Reserve Bank of India. He has been the nominee director of Reserve Bank of India to UCO Bank and Corporation Bank. We've got Umesh Mohan, myself, and experienced investment banker, who is currently the ED and CEO of the organization. We've got Kavita Menon, who is the women director of the organization, who is responsible for the learning and direction part. Now, to give you a brief, we have something called the corporate strategic back office, which is basically the CEO's back office, and this has been powered by PwC, PricewaterhouseCoopers. This is an eventuality of the international corporate inheritance, what we as senior management, we have received, because right from the beginning of our organization, right from the time which we pedaled into gold loan, we had the big fours as our consultants. For initial years, we had KPMG, later we had Grant Thornton, and since last 3 years, we have the PwC. So they are a part of the operational expenditure management, they are a part of budgeting and planning, they are a part of business strategy and governance, they are part of reporting and management information systems, they are part of organization structure and performance management. Apart from that, before anything gets tabled to the board, it gets vetted by the PwC team. And there's a 3-member PwC team at the corporate floors round the clock, where they run a concurrent process and procedure audit since we are a retail company. Now to start with the journey from 2018-2019, we were at 229 crores of AUM with 135 branches, 400 plus employees, Kerala, Tamil Nadu and Karnataka. As we are on YTD December FY24 as on December 31st, we are at 1,410 crore, which includes our on-book and off-book balance sheet, where on-book is approximately around 800 crores and the balance in off-book. And what is off-book is because we have got direct assignments with banks and we have got co-lending arrangements with banks. That is our off-book portfolio. We have 268 branches as on YTD December. As on YTD FY24 December, we have 1,300 plus employees. We are present in Kerala, Tamil Nadu, Pondicherry, Karnataka, Andhra Pradesh, Telangana, Odisha, Maharashtra, Madhya Pradesh, Delhi and Uttar Pradesh. To give a brief on the financial performance, we have a total business of 1,635 crores on FY23. As on YTD FY24 December 31st, we have a business value of 1,926.13 crores, which is an increase of 17.74%. We have a coupon deposit along with us at FY23 at 482.03 crores, where at FY24 YTD December, we have 516.6 crores, which is an increase of 7.17%. Our total advances as on FY23 was 1,153.89 crores. And as on YTD FY24 December 31st, we are at 1,409.53 crores, which is a growth of 22.15% till the third quarter. We had a net profit of 20.54 as on FY23. As on YTD FY24 December 31st, we have 36.23, which is an increase of 76.39%. Net interest income, we had an interest income of 100.28 at FY23. We have touched 126.95 as on YTD December 31st, FY24, which is a growth of 28.59%. Our return on equity, FY23, we had closed at 12.71%, whereas YTD FY24 as on December 31st, we have reached 16.68%, which is an increase of 395 basis points. Our return on assets, we had closed FY23 at 2.03%, and YTD FY24 December 31st, we have closing at 3.18%, which is an increase of 115 pips. Our 90-day DPD, we had closed FY23 at 1.56%, and YTD FY24 December 31st, we are closing at 2.19, which is an increase of 63 pips. Now just to take you through the key indicators, we had closed a net worth of 163.09 crores for FY23. As on YTD December 31st of FY24, we have closed 217.54 crores. The revenue FY23, we had closed at 187.43, and the third quarter itself, YTD December 31st of FY24, we have reached already 211.21 crores. And the PBT FY23, we closed at 31.29 crores. As on YTD December 31st FY24, we have already touched 50.1 crores. The debt equity ratio last financial year, FY23, we closed at 4.73. And this YTD December 31st, we have closed it at 4.01. And the NPA was 1.5 at FY23, and we have closed this December 31st at 2.1. So we have a 33.45% on average growth on assets on 3-year average, and we have a 34.45% a 3-year average growth on net worth. Taking you through the profitability, FY23 we had closed at 31.29. You could see the quarters how we performed. Q1 we were at 20.26, Q2 we were at 18.91, Q3 we were at 10.93, and YTD we are at 50.1. Where we have taken our cost to income ratio at 27.08% and the total expense ratio at 76.28%. In terms of capital adequacy, I would like to take your attention to the Tier 1 capital we have at FY24 YTD. It's 217.54 crores and Tier 2 is 78.32 crores. And it gives a capital adequacy ratio of 25.42%, whereas the RBI prescribed is 15%. So we are way above the adequacy ratio. To give you a gist on the business summary, FY23 we closed at 1,153.89 crores. As on YTD December 31st FY24, we are at 1,409.53 crores, which is an increase of 255.64 crores, which is basically a growth of 22% plus. And out of the 1,409.53 crores, we have 804 crores as our on-book asset and 606 crores as an off-book asset. And off-book, again, I repeat, off-book consists of the direct assignments which we have with the bank and the co-lending arrangements what we have with the bank. And I would like to take your attention to the fact that 1,409.53 crores consist of 1,264.8 crores of gold loan itself. And in terms of acquisition, we have acquired around 42,000 plus customers till YTD December in this financial year itself. In terms of the disbursement trend, till YTD FY24 December 31st, we have disbursed 2,362 crores, whereas we have disbursed 2,436 crores for FY23, and we have already touched 97% of last year's December by this Q3. And I would like to take your attention that 94% of our disbursement goes towards gold loans. This is basically testimonial to the fact that we are a gold loan focused company. In terms of branch productivity and network expansion, FY23 we were on an average of 4.6 crores, and December 23, even after opening 37 branches, we are at 5.26 crores as on YTD. So this shows that not only our existing branches sweat, even the branches which we open also sweat at the earliest possible. In terms of portfolio composition, we have 89.7% of gold loan, the privileged personal loan to be 5.2%, business loan at 4.7%, the MSME loan at 0.3%. In terms of geographical distribution, I would like to take your attention to Tamil Nadu 28.22%, Karnataka 27.3%, Andhra Pradesh and Telangana to be 18.8%, Odisha to be 15.9%, Kerala to contribute 3.5%, Maharashtra at 5.3%, Madhya Pradesh at 0.53%, Delhi at 0.19% and Uttar Pradesh at 0.3%. It's Maharashtra, Madhya Pradesh, Delhi and Uttar Pradesh have been relatively new geographies for us. But I would like to take your attention to how Andhra Pradesh and Telangana is a growing segment with us. In terms of financial association, we have got partners where we deal with them in different verticals like term loan, cash credit, direct assignments, commercial papers, working capital, demand loan, market-linked debentures, institutional NCD placements, and co-lending. I would like to let you know that SBI is our one of largest financial partners we have. In terms of way forward, we are currently around 268 branches with another 75 branches and expansion going within the region where we are already there. And apart from that, in this quarter, we would be entering into the state of Gujarat and Andaman Nicobar Islands. And at the first quarter of next financial year, we are planning West Bengal and Rajasthan to be a part of our entry. And I would like to take your attention that in Telangana, we have a 20 branch more expansion plan over here. In order to give you expanding the list of achievements what we have got, we have been awarded as one of the best top 50 BFSI sector places to be working. This has been awarded by the Great Place to Work. That means we are India's top 50 best place to work in the BFSI sector by the Great Place to Work. And we are also been awarded 3 years consecutively by the certification of Great Place to Work. Apart from that, we were awarded as the fastest growing NBFC by the BFSI Leadership Summit. We have been awarded as the Brand of the Year by Outlook Business. We've been awarded by ET Now as the most impactful CEO. And we have been awarded by Ashokam last year as the runner-up for the best secured debenture instrument issuer. Now getting into the fourth NCD public issue. I did touch upon the fact that I always felt that the gold loan company secured NCD is the most secured in the market. Because basically what is a secured non-convertible debentures of an NBFC. So the secured underlying security asset is always its loan book. So if you go to a home loan company, the underlying home loan is the underlying asset for the secured NCD. If it's an automobile financing company, the existing automobile finance account is the underlying asset for the NCD issued by them. But for a gold loan company, the NCD issued by them, the security has been underwritten by the gold loan provided by them. So the gold loan itself is the asset. So here I would like to take your attention to the fact that here when a gold loan company provides the gold loan, basically the security is already under their possession. That means the jewelry is already under the possession. It doesn't need another securitization act to be taking place in terms of any default. And again, as a worst case scenario, liquidation in terms of default is as liquid as cash. So what I always tell is that the investor ultimately invests onto the secured NCD issued by a gold loan company is as good as investing in gold bonds. The only difference here is that they would not have the advantages or disadvantages of the volatility of the gold price, but rather they are being given a secured instrument which is underlying asset is gold, and they have been given a fixed coupon return on it. So basically the safety is more than 100%.